your focus also there should be, I'll get dividends, but if I still get capital appreciation, then that would be a bonus. So you could make a combination between common stocks, or you can also combine it with REITs, because both of them also give you capital appreciation, but in the same way it gives you dividends. But if you want a level of stability and predictability, you can also add preferred shares to the mix. Hey guys, so in this video, I want to talk about the stocks that you should be buying right now, or at least considering. And I know you guys, most of you guys are working, or you have a business, or you're crushing it in whatever profession that you have. And some of you don't really have the time to be able to learn. Some of you still want to invest. Some of you want to build an asset, but there's a bit of uncertainty. There's a shroud of uncertainty. There's a bit of fear also because of what's going on in the macro. There's a lot of things that's going on also here in the Philippines. High inflation, stronger dollar, higher oil prices, and so much more. And that has been a cause of concern for a lot of people investing. And I want to discuss in this video the top 3 stocks that you should be buying right now in this era, in this season where there's a threat of a recession in the US, and we've seen over and over markets that have volatility, aka not bond, take a beating for 2022. And I hope that this is something that gives you value. But I want to say this also, that no matter how much I discuss this, guys, please take the time to be able to learn. Please take the time to be able to understand. Please take the time to be able to research it also, that no matter how much I talk about it here, don't just buy it just because it's discussed here. What will give you the ability to do well as an investor is that you've made informed decisions, that whenever you press that button to buy, it's a decision that you made on your own, not because you've heard it off of someone in TV or in YouTube, or you've heard it from a friend. The strength in investing is that when you decide it on your own, the strength in investing is that even though if you won't be able to make a perfect decision, or it may not turn out the way you want it to be, but it's something that you own up. It's something that, based on the information that you have, that's the best choice or route that you should take. There's nothing wrong with that, because when you make a mistake from trading or investing, it allows you to become better. It allows you that later on, when this scenario will occur again, or later on, you can make better decisions. So never fret that if you make a mistake when you invest, that it's the end of it all. That's why it's so important to just put money that you don't plan to touch. It's money that's an excess. It's money that won't destroy your way of living if it goes the wrong direction, if it goes the other way, because it's easy for you to be able to recover. It's easy for you to look at the lesson in it and to mine what you can get from it, so that you can use it for your next investments. And here's the thing, since we're talking about the stock market, I really believe that, at least from my exposure to crypto also, it's relatively not as risky as compared to the crypto market, where if you look at altcoins or even meme coins in the crypto space, we've seen them get wrecked. We've seen prices drop 90%, 95%, 99%. We've even seen DeFi protocols who had websites in 2021 now have nothing at all. And that's my perspective on why, okay, crypto versus stocks, if you're the type of person that wants something that's relatively safer than crypto but still want better upside, then the stock market is still the way to go. That being said, 3 stocks that you should consider. Number 1, dividend stocks. And I've been saying this over and over, stocks that give dividends are companies that are earning. It's not just that they're earning more than what they need. That's why they have the ability also to give it out to their investors. That's why they have the ability to reward their investors. Please do note this, that when times are bad, dividends are slashed. When times are bad, dividends are taken out of the picture. But if the companies that even in bad times still have good dividends, and if you look at their earnings, you look at their cash, they're well, then that's a really, really, really sound company. So here's the thing, we don't know where the market will go. We don't know how low it could possibly go. We don't know what will happen when the Fed raises rates, and how other countries also will react on how they're increasing the rates, and how everyone will react based on it. But if the company has dividends, remember this from the videos that I made, you can search it out, Marvin Germo Dividend Investing, or anything Marvin Germo Dividends. You can search it out, that I've made discussions about it, that the lower the price would get, the higher the dividend yield that you would have. Or if you're in it for the dividends, that if the price would go down, and as long as the company is faithful and consistent in giving out its dividends, then you still get the yield that you want, and you still get the cash flow that you want. But if it goes lower, then you have the ability to get a higher dividend yield. So that's number 1. Your focus also there there should be, I'll get dividends, but if I still get capital appreciation, then that would be a bonus. So you could make a combination between common stocks, or you can also combine it with REITs, because both of them also give you capital appreciation, but in the same way it gives you dividends. But if you want a level of stability and predictability, you can also add preferred shares to the mix. So if you're asking me what do I like among the three, I have a combination of both, because I'll say this over and over. It's not about what's best, because you can have all of them. We are in an era right now that it doesn't have to be or, it can be and. So you can have common shares that give you high dividends, you can have REITs, and you can also have preferred shares, and they're a good mix as part of your portfolio. I really believe this, especially if you're a passive investor, especially if you're the type of person that wants a bit of stability, you want a bit of safety, and you want that, okay, over a period of time, it might be hammered down right now, it might go down right now, I don't know where it's gonna go, but over the long term, I know it's gonna be good. You can go with ETFs. ETFs that track the index. And if you're watching this and you're just in this for the Philippine stock market, we only have one ETF, and it tracks the index and it tracks the PSEI. And what I like about it is that you have 30 stocks right there that's recalibrated every 6 months, and 40 to 45% of the companies that are part of the PSEI is BDO, AC, Ali, SM Prime Holdings, companies that we've seen it time and time again, run by the best entrepreneurs in the Philippines, companies that have stood the test of time, companies that have been there in different crises, but they've managed to become bigger, better, stronger also. And it gives you also the stability that, okay, these are the companies that are relatively bigger, they comprise almost half of the PSEI, that you have the ability to, okay, I'm just gonna wait it out even if they drop, because I know that they'll be there 5, 10, 15, 20 years from now. But above and beyond that, if it drops also, you can have also the insight that I'll stack. This is not like crypto, that in crypto, if it drops, you don't know 10 years from now if that particular altcoin will be there. But if you're looking at the index, you're looking at the PSEI, you're looking at an ETF that represents it, then lower prices gives you the ability to stack more, gives you the ability to add more. And I'm saying this over and over, that the Philippine Stock Exchange Index, we've seen it in history. Even if you look at and research S&P 500 or you look at the Dow Jones, that when they drop, it's normal for it to drop. It's normal for it to go down, but they always go back higher than where they were before. You always have to remember that. It's not a matter of opinion, it's a matter of statistics, it's a matter of history, that it's only a matter of time when they will go up. And a bigger question that you need to ask yourself if you're a long-term investor and you're a person who wants to expose yourself to the index, what are you doing when it's down? And I've made so many videos about this, saying to you that when it's the most uncertain, when it's the most risky, that will also give you the largest amount of upside. And that's why, please, after this, please study more about the PSEI. Please study more of its facets. Please study how it can benefit you as a long-term investor. Search it, Marvin Germo, PSEI, Marvin Germo Index, Marvin Germo FMETF. Check it out on how indices work. When you're buying the index, and I've said this in so many videos, that you protect yourself from buying a company that becomes bankrupt. You protect yourself from buying a company that goes to zero, because since it's recalibrated, there's a big chance that none of those companies that are in the index at any given point in time will be zero. And if you're a passive investor, you're someone who is more risk averse, that's something that will give you an assurance that, okay, the price may go down, there might be volatility, but at least what I'm investing into has value. And that's what I want to hammer down also when you're investing in the stock market. The ones that have dividends have value. The ones that are part of the index have value. Number 3, what are the stocks that you should buy right now? Look at the ones that in the midst of the recession, in the midst of uncertainty, and even during the times when there was lockdowns, their service or their products were needed. And you know it already as an end user. You know it already also as a consumer. What are the companies that no matter how hard things would go, they will still have customers? The Meralcos of this world, the PLDTs of this world, the Globes of this world, or even the Aboitiz Powers of this world. Look at it from that perspective, that because they're needed, they will still have customers. That because everyone needs internet, Globe, PLDT, Converge would be very, very relevant. And as we start to go out right now, and people are so used to internet, if you're used to having higher speeds of internet at home, and when you're out also, you would want to have higher speeds of internet from your phone. I think there will be more and more people that will be trying to push also towards getting more faster data towards mobile. Groceries, the Pure Golds of this world, things that are sold inside Pure Gold, products that URC has, products that CNPF has. Always think about what are the products that you will continually buy even though inflation is high. Think about what are the services that you will continually use, even if the dollar is high, even if oil is high, and even if inflation is high. What are the things that Filipinos will continually use? What are the things that will never stop to have revenue? Or even if you look at it from this perspective, what are the companies that, because they have amazing brand, people will still go to them because they'll have revenue? If you want to dig deeper on the company, then look at their income, either on a yearly basis if it's increasing, or look at it from a quarterly basis if they've started also to recover from what happened in March 2020. You can look at it from that perspective. So you can look at it from an entrepreneurial perspective of how the business would work and how customers respond to those businesses, or you could also drill into the numbers, also the level of debt that they have, the income that they have, the cash that they have, how much are their sales, how much are their net income, and you can combine them and you can fuse them. But what I'm saying is this, and that's why I'm trying to explain it this way, that it's not rocket science. You don't have to be an economist to know which are the companies that they will still have customers, or they have such a strong brand that people will come back to them. And I'm trying to make this as simple to everyone as possible, because I want you guys that right now, that I know there's gonna be a rough road ahead still. We don't know how things will play out in the global macro. While I'm making this video, Ukraine and Russia is still a story, oil prices are still high, the dollar is still high. Those are all relevant things, and we don't know how that will unfold or how they will play out. But we don't have to look at that. We have to focus on what are the things in the Philippines that will do well. What are the things in the Philippines that you know will give you dividends? How can you be exposed to the index? Or which are the companies that are so needed, so relevant, that they will still have good business no matter what's going on? So there, I hope you guys got a lot from this. I hope that this was insightful. If you guys have questions, put it in the comment section down below, and I'll try to make videos on top of it. Or if you want to drill in deeper, check out the books that I've written, check out the seminars that I have, or check out the videos that I've made also. If you want to know more about it, just search it: Marvin Germo Index, Marvin Germo FMETF, Marvin Germo Stocks, Marvin Germo Dividends. We have tons of videos for you, because the ultimate goal of this channel is to give you as much value as possible, to give you, while you are in the prime of your years, a shot to be informed, so you make better decisions when it comes to your money, so that you're not just working to pay the bills, you're not just working to pay off debt, you're not just working to be able to meet your needs, that you get to set aside money for your future, that you get to set aside money to make your money work hard for you, that you get to set aside money, that you build an asset class. When times are uncertain, you know what to do. Please do take note of this. Those who win in investing, those who win over the long term, are those who are informed, are those that when times are bad, times are scary, when things look risky, they're the ones that know what to do. They're the ones that are unfazed because they took the time to be able to study. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.